The big topic on this trading floor and a lot of the pieces that you've written is about global growth. At one point it was synchronized, now it seemed to be reversing, synchronized shrinkage, so to speak. My question and the discussions revolve around, are bad policies and lack of reforms, whether in Europe, Japan, China, are they just destined to roll up on our shores, or can there be some divergence in the growth metric from a global perspective?
Well, I think if you go back to the end of last year, there was a view that we would have a synchronized recovery this year, and that's just not happening. Europe has slowed rather abruptly and unexpectedly so. Japan is contracted. China has been very weak. The U.S. has had decent growth. The second quarter was certainly a good quarter overall, but I think it's the peak rate of growth for the year. And we're going to see the U.S. growth trail off as we move into the second half. And that means in very short order, we're going to have a synchronized slowdown globally. All the major areas will be weakening.
You know, and it's hard to argue with everything you've said, but I am going to push back. You know, whether it's Merkel's leadership, and I know the EU summit had some, agreements on immigration, which definitely is a thorny issue. But she's weakened. Macron's pretty strong in France, but there's problems in Italy and reforms all across Europe. When you take Japan, their central bank is taking them to Mars with the amount of ownership it has with regard to the economy. The U.S. tax cuts, many say that's it, but at least from the individual side, most of the benefits are gone. I disagree, and I think the tax cuts on small businesses, medium-sized businesses, is going to be a tailwind for years to come. Can we see some of the issues about capital flowing here due to our better treatment of capital, partly due to the tax reforms?
Well, I think that when you have a debt-financed surge in federal activity, such as we've seen, for the tax cut and for the increase in federal spending, the economy receives a transitory benefit, and that's what was at work in the second quarter. But because we're so heavily indebted, those benefits wear off very quickly. And that's really the problem in Europe. They're trying to solve an indebtedness problem by taking on more debt. They get these little fleeting episodes in which growth is better, but then it weakens very quickly. And moreover, in the United States, remember there's a second wheel of stabilization policy. That's the Federal Reserve. And the Federal Reserve has engineered a very dramatic contraction in the reserve aggregates. There's been a sharp slowdown in the rate of growth of both sides of the bank balance sheet, the liability side from which we determine money supply growth, and the asset side, which is comprised of loans and investments. So we have a major deceleration in bank credit and in the money supply. We also have a flattening in the yield curve. And these elements together suggest that the U.S. economic growth is going to trail off.
We're going to have to leave it there. I know we could go on. Next time you come back, I still want to dig deeper in some of the possibilities to bolster a little bit more activity on the U.S. side.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.